Hey, my name is Tucker Kraus. Got a news update for you guys. Listen while you waste any time. Get right into it. Alright, did services grow or decline? Well, US August Services PMI 43.7, expected 44.2, July 44.1. US August ISM Services 56.9, expected 55.4, July 56.7. And so this doesn't tell us anything. This is two totally conflicting indicators because above 50 is growth, below 50 is decline. And this is quite a ways below 40 and above 50. So this shows pretty significant growth and pretty significant decline. And so what are we supposed to do with this? Well, completely inconsistent data, so nothing really. Anyways, next thing though, consumer credit suddenly slows. This will, maybe be able to actually tell us something unlike those last numbers. July, second to lowest of 2022, $23.8 billion added, and that's a big miss to the downside. Expected was $32 billion. Though June was the second highest on record, so it's not like we're suddenly cratering. You can see we're still pretty up high here when we look historically. Though we got to dive into it a little bit more. When we look at revolving credit change, so this is primarily credit card usage, it's $10.9 billion added in July, and it's not too far off of June, as you can see here if you look closely. Though if you look at non-revolving credit, which is things like car loans and other big ticket items, $12.9 billion added in July, half the growth of June. You can see quite a big difference there, and so that shows that interest rates are really starting to hit the consumer. Right when your interest rate goes way up, you can't afford to, get as nice of a car, of course, because your car payments are going to go up. Same thing goes for mortgages as well as other things like that. And so this gets especially interesting when we get into the next topic here. And so this is what you probably clicked on the video for. Keep watching the Strategic Petroleum Reserve, or Zero Hedge likes to call it the Strategic Midterm Reserve, because of course, why else is Joe Biden dumping it? Let's be real here. He doesn't care about you. He wants your votes. Alright, on March 31st, 2022, Joe Biden announced the SPR would release 1 million barrels per day for the next 180 days. September 27th is 180 days later, so that deal will be up. And, well, he'll have got your vote for midterms pretty around that point, because I don't know the exact date, but it is soon, and so he just needs to keep gas prices down long enough, and that would help the Democrats, of course, which is what he would want, because he's a Democrat. But let's be real here, they can't drain this forever, and so, let's be real here, they're going to stop draining it right after the election, and then gas is going up to $10 per gallon, which is, of course, not good, because, of course, they're not doing anything to actually fix supply or, anything like that. Of course, let's just dump out more money and hand out inflation checks. Let's not actually fix the problem. That would be way too much work for politicians. And we can see from Zero Hedge here, 18.5 million barrels drained from SPR in the past 3 weeks. The last time there were just 442 million barrels in the SPR was in drumroll. I hit my keyboard and stuff, so that probably sounded bad if my mic did pick it up. Anyways, 1984. And so you can see it's just been falling like crazy here, right? Let's zoom in on a little bit more. That's not good. Especially, if they're going to stop taking in Russia and oil and stuff like that. Though, of course, they're not actually doing that. Right, Europe, well, we're not actually getting from Russia because Russia's sending the gas to India, and we're getting that gas from India. Don't worry, guys. Anyways, U.S. household net worth crashes in Q2. In Q2, U.S. household net worth crashed by the most ever, $6.1 trillion. Though, of course, with this, it's kind of just being overly fearful, because I don't know if this is adjusting for inflation and asset inflation and those sort of things. Right, how many points was the S&P in 2008? I don't remember the exacts, but way less than now, so I don't know if this is the most fair comparison. I'm not sure. I couldn't find if this was adjusted for that sort of thing or not. If it isn't, this isn't really anything to pay attention to. Of course, it's a bad thing, though of course it's likely not as bad as it seems just with the charts, and it's probably just Zero Hedge being Zero Hedge. Anyways, if you enjoyed the video, make sure to click like. It would help me out a whole lot. So this is not financial advice. Do your own research. Thanks for watching, and I will see you next time.